let's understand the business a little bit more. CapEx utilization plans with Pradip Kumar Das, who's the Chairman Managing Director, now joining in. Thank you for taking time out. To begin with this fresh issue, what is the outlook in terms of your growth runway? What is the reason for opting for this IPO?
Thank you, Aisa. First of all, let me thank you and thank your channel for inviting me. And this is the first interaction in your channel with respect to our IPO. And we are working in this space, pure play green financing, since 36 years. And if you see our net worth in September, it is 6,500 crore. And we can go roughly to 7 times of our capital gearing of net worth fund as per the RBI healthy compliance norms. And we need to ensure not only minimum 15% CRAR, ideally at 17%, in order to ensure that we continue to maintain the AAA stable rating. So this 12,900 crores of additional equity, that will enable us to again 7 times leverage and enable us to further finance in this space. If you see last 3 years of CAGR of our loan book addition, it is more than 30%. And if you see the sanctions and disbursement, CAGR is 72 and 56%. So which means we have tremendous potential to lend, and we only need to augment the supply side, that is the borrowing side. As of now, our loan book is more than 47,000 crore of September audited data. And even in March also, we had crossed roughly 47,000 crore. And we need to keep on add further. And if you see, this is a 36-year-old company. 3 years back, our loan book was hardly 23,000 crore plus. In last 3 years, we have added more than 24,000 crores. That means renewable energy sector is requiring quite a lot of support from us, because we have been handholding the sector since last 36 years. And in the country, last 9 years, the renewable energy is growing in a jet speed. And if you take the example only of solar, last 9 years, 25 times of solar growth has happened. And now the solar, wind, hydro has become quite a traditional kind of thing. And in emerging space, we have the time now for new and others like ethanol, compressed biogas, even manufacturing of solar components to make Atmanirbhar Bharat, not only to make Atmanirbhar Bharat self-sufficiency, but also to support the export market, what competence we are having. In addition to that, the new and other emerging is storage, be it pump storage or battery storage, be it offshore wind, be it green hydrogen and its derivatives. So demand side is pretty good for us. And since we are pioneering this space and kind of single-handedly shouldering the responsibility of RE growth in the country for more than 2.5 decades, and last 7 to 8 years, others have come into this space. They are largely coming in the traditional RE space, where the fair amount of asymmetry information is over and risk matrix is fairly known. Unlike us, we have always taken the challenging and emerging sector. In addition to that, in last 36 years, if you take till up to September, we have financed more than 1,07,000 crore, and our cumulative write-off is just 203 crore, which is less than just 0.2% of it. And largely, we are lending in private sector. Even if you see September data, our loan book, 77% is private sector, and 23% from the government sector, which includes state utility and central utility.
You know, allow me to come in here. I want to understand a little bit more on your spreads, because that has come under pressure due to a decline in yields. Just a quick word on the outlook on your yields.
See, anything above 3.5 of NIM is quite comfortable for us. And again, if you see, we maintain a basket of mix of RE assets. Today, if you see, 62% of our assets are traditional RE, that is wind, solar, hydro. Out of which, if you see, the 80% of the project are commissioned asset, which indicates where we have lesser NIM supported by lesser provisioning coverage ratio. If you see, our PCR is around 46 to 48 against the normal thermal projects financing companies, where it is more than 70 plus.
You are investing in a sector which is the sunrise sector. But technologies, they keep on changing here. For example, if you, let's say, would have done financing to the solar company 5 years ago, the rates have come down from 15 rupees to 3 rupees a unit. Isn't that a risk right now that the sector in which you are financing, there are a lot of changes which are happening and which just changes the business model?
First of all, being a lender, when we are lending, all the mathematics are known, because once the PPA is in place and all the mathematics are known, and once the project is commissioned, typically in case of solar and wind, it takes hardly 6 months to 1.5 years to commission the project. And we have the construction period is very less. And since we are having the expertise, our support to the sector, our turnaround time is quickest, where the project construction time even reduced to the developer when they have taken the support from us. So once we have financed those mathematics in place, and this PPA and others are sacrosanct, only one case where the state government has decided to dissolve the PPA, but that has been already sorted out through court. So as you are saying, the technologies are changing, but once the PPA has been signed, the cash flow is going to be coming with respect to that PPA rate. And more new projects are coming. So while we are financing, that risk period of 6 months to 1 to 1.5 years as a lender, we have to see what kind of price other things can happen. And if you see largely, as on date, even almost 90% of the projects components are import. And
how are you different from, let's say, banks? Because SBI is also saying that we are lending in the renewable sector. REC PFC is also saying that we are doing the same and we are increasing our exposure to new energy sectors. How are you different?
See, if you see, the future is renewable energy, not thermal. We need to keep thermal only for having the base load factor and to peak load balancing. So therefore, all along REC PFC, they have handholded to ensure that energy connectivity as well as energy supply to each and every household in the country. That phase is over. Now the next stage is how to ensure around the clock power, as well as the objective of not only supporting power, how to decarbonize and energy transition. So today, even IREDA's focus is also not only renewable energy development support, also to decarbonize and energy transition. Because the Panchamrit target, what we have, our Honorable Prime Minister has committed in the POP program, not only 500 gigawatt of RE installation by 2030, but also the NDC target also we have to achieve. So what it means, another additional 320 gigawatts of RE is to be installed. At the same time, approximately 30 to 30 gigawatt of thermal is going to be installed. Now, if the future is largely from renewable and new sources, then REC PFC's future business also has to come there. And you are right, bank and others, they are coming. So they are coming largely in the established area, that wind, solar, hydro, which even if you see 10 years, 15 years back, nobody was coming. And when I'm talking hydro, small hydro, because large hydro was not RE earlier. Post November 2019, redefining the RE in India, this large hydro was brought into this basket. So the portfolio of those companies who was lended in that space, that is they are showing it a larger space. But if you see in true sense and spirit, which was India's earlier definition, it was we who was largely lending into it. And again, any bank or generally in banks, they have some project financing. Then within that, they have sectoral caps, be it for power, be it for others. So when the lending happens, they retain themselves with that. And then as long as they are not very comfortable, they will not be coming forward. I can share with an example. If you look at the manufacturing of solar modules and cells, or even now, Government of India has come with PLI schemes for integration of entire facility, so that the entire components of the solar can be manufactured in India. And in 4 years down the line, we are targeting to have at least 100 gigawatt of installed capacity, not only to support within Indian projects, but also to export market. But there, you will not find much lender available in that. But if you see, look at us, we have more than 2.5 decades to almost 25, 27 years of expertise in this lending to the manufacturing. And if you see our prospectus, what we have published,
right,
two of our borrowers are there since more than 2.5 decades.
No, sure, point taken, Mr. Das. Appreciate you joining us and, candidly talking about your business outlook as well. And of course, we have seen a lot of interest for your IPO. So good luck on listing as well.